Welcome to Java. Thank you kindly for joining me. It is November 26th, 2024. It is Tuesday. Now, I've got this up here because I missed out on the ability to post yesterday. I tried a few times, didn't go through, just didn't have stable enough connection. So, got a lot to cover today. As a result, this will give you a little bit of an idea of what I would like to start with for the underlying of what we're seeing going on here. So there is quite a bit to go over. As I said, let's start with the markets. Our risk indicator favored one. The MMRI is actually down this morning. 284.5 yesterday was above 290 as we had a lot of inflow to the markets. As we expected, now this is on the choice of the Treasury Secretary Besant. So markets like this obviously kind of hit all around. I'm sure you probably heard about this, but knowing that this was someone that would be market friendly, the stock market basically took off on this. So we've got fear greed meter is strongly into the greed territory now, 64 as we're speaking. I believe it was 61 yesterday when I started this. So I would like to look at a few things that are underlying this. The first is the 10-year yield and really the relative strength of the dollar. Now, I know I spoke about this toward the end of last week as it started advancing in a major way. Now, I left this up. It was above 107.32 at one point in time. So this morning's come down 106.77, and this is part of what has dropped this risk level. At the moment, the 10-year yield relatively stable at the moment. Now, we'll talk about this a little bit more in a moment. Cryptocurrencies at the moment taking a hit as well at 91,527 for Bitcoin. Now, if you are not feeling like you can hold through this, there is a potential gap fill level all the way down at 78,000. And then after that, possibly even closer to 74,000. So if you don't feel like you could possibly ride it through these levels, you may want to consider what you're doing now. Then again, it could hold these levels. I've got some more about that as well with MicroStrategy, of course. Now, we've got a lot of news coming out this morning about the incoming administration and the new tariffs that are going to be placed, in particular US trading partners. And the named ones are Canada and Mexico. So with these, that is going to affect the trade imbalances that I like to speak about because that affects the strength of the relative currencies. Now, we've got Villeroy saying that the European Central Bank can lower rates independent of the Federal Reserve moves. And I would like to say go ahead and try that because it won't work out very well for you. And at the moment, we're watching, this is the foreign exchange rates at the moment. We've got the euro is recovering because the US dollar actually crushed these. I was speaking about this Friday as it was coming in. Now, we've crushed the pound in particular and the euro. So these two are finally recovering a slight bit this morning, but as you can see, they're still down quite a bit. And the Dixie, or the relative strength of the US dollar, is higher than euro. So we're watching the yen also taking a hit, and we are also going to be taking a look at the yuan from China is also out of balance. Now, the sentiment was as the Great British Pound dropped in strength. As the currency drops, the markets will go higher, relative markets to them. So Great British Pound, and we're going to watch the European market, in inflation will come back. So we've got behind this the yen carry trade still happening. Japan is selling a lot of US debt and treasuries, as well as China. Now, I spoke about this late last week as well, but now it's beginning to hit the markets a bit. So today we've got the today to trade as well as tomorrow. It's a full day, although I expect that volume will be very light, in particular towards the last half of the day. Thursday is closed and Friday will be only a half day in the morning. So we're going to have very high volatility on Friday and very low volume. So we'll keep an eye on that if you are indeed trading for this week. Now, right now, stocks and futures, I believe they took a hit earlier this morning, but they're already recovering. Now, there is room to move still on these foreign exchange trades, whether it's due to the tariffs or also the trade. Now, Asia stocks and Japan's Nikkei. So this is here, part of the story right here, saying that it's falling after Trump threatens the tariffs. This is mainly on China. Now, China runs the yuan and also a separate exchange. And they're saying that Japan's Nikkei leads the losses. Well, Japan is not under threat of tariffs. What's going on with Japan is the carry trade. So you can't really take the stories as they are, as you know, because you are here for a reason. So with this, we've got this Japanese yen again coming back to haunt. It is hurting on the stock market. They are going to make a move aside from selling treasuries, which is affecting the US 10-year yield as we're watching this play out in real time. So, watching that and the trade imbalances. Now, I brought this up because this is prime example. Yesterday, uh, the stocks now in Asia are taking a bit of a hit, but as the currency drops, this is what the market looks like for them. So when the currency gets weak, all of the money wants to flood out into the markets where they can possibly make more. Now, we've got, because of this, Europe, same thing. So the United States, with the dollar in effect, is pulling a rug pull on the other currencies. This is what we're watching. So if you're not seeing this, you can see it in the debt as they're selling the treasuries, dumping all of these, and you can see the issues that we're having relatively. These are the bonds. So we'll talk a little bit more about the debt and what is going on with that as well. But as these go down, then money or currency of whatever, whether it is euro, pound, yen, doesn't matter, goes to where it can get more return on the money, which in this case, stock market. So for these reasons, I believe the stock market, because the United States is the strongest, and that's why the greed is so high. So there is more room to move. But I want to be very clear about this. This has accelerated by magnitudes the risk on the underlying of how rapidly this can change. So, risk increased on the, as we would say, the delta or the rate of change that you can have in the stock market means could happen instantly. So, more words about the tariffs. They're talking about Mexico and Canada having issues with their currencies now because of the tariff threats. So, their stocks going to benefit from that as well as United States stocks because they will all put money into the US stock market as well. Now, this seems like an off story, but the USS George Washington returning to Japan after nearly a decade of being away. Now, tremendous amounts of things happening in the Middle East, as you're well aware of, and yet they are moving one of our most sophisticated forward resources assets, if you will, near Japan. And this is because there's a large cover-up going on in what is truly going on in Asia with the fiscal wars there. So stick with us. We'll keep you up to date on that. Now, I want to give you a graph. This is the chart for the euro to the US dollar. Now, it's come back up quite a bit already this morning since this, but you can see the relative strength of the dollar just crushing it. So now we've got below parity. And then we've also got this quote, which is also a note of caution on what is going to happen forward. Jerome Powell noting that the impact of fiscal policy under the incoming administration has not been factored into their equation. Now, we'll hear a bit more about them and see about whether they are going to cut. Okay, now as far as what we're expecting, getting a lot of reports between today and tomorrow, actually, prior to the market opens, we'll be looking at these numbers as to how they are going to be expected to move. FOMC minutes today, 2 p.m., that could be a mover of markets. So cautious on that. Now, I'd like to speak a little bit more about last week. Have companies rushing to sell bonds and loans prior to the market slowdown this week, meaning end of day today, tomorrow, and Friday for the holidays. Now, high grade sales climbed to the second highest level on record. Now, I want to bring this in. The debt level, second highest level on record. That is a major flag. Okay, so we've got other issuance collateralized loans jumping. And then I also wanted to bring this up. Some of Wall Street's largest banks teaming up with BlackRock, tech systems to provide real time pricing data for United States corporate bonds. So when the corporate debt implodes, can happen in real time. Okay, so we've got the election, of course, shifting the Fed rate cut outlook because we just read that Jerome Powell was not ready for that. We've got the dollar has had a tremendous gain when it hit above 107. So right now we're watching a temporary pullback, but I expect that it could run more. There's more to go. Nobody knows for sure, but let's take a look at what's going on. So this is another warning flag in my books that credit so hot that traders are building shorts. Again, spreads near all-time highs, making hedging attractive. We've got the yield curve, as you would, the inversion going back and forth, just absolute madness. So with that, they're trying to say we're all safe. To me, that is more of a flag because it is not normal for it to be having these kinds of moves. So back to the Fed, we've got them saying that elevated asset valuations could threaten financial stability. Now, the elevated asset valuations are because of their policies and the massive amounts of printing that are going on. So, really, the threat of financial stability is due to their own hands. Nonetheless, they've come out with this report warning about this and talking about the financial system being vulnerable to shocks. Well, they've done it to themselves. And this new thing that they're saying is that blaming the inflation, which is self-created, that it's set to reinforce their go slower approach. So cuts may or may not happen, could be less than what is expected because inflation is now holding them to the fire, so to speak. We'll see what goes on after the minutes today. Now, short word about MicroStrategy. They had a huge rally that they did become overheated. They are now pulling back. Was going to bring this up yesterday as far as pullback, but I think it's temporary. They could soon reveal $3 billion in Bitcoin buys with more bond proceeds. This has not happened yet. So they raised over $3 billion and they are planning on purchasing more. So this is what I wanted to mention. So even though there is possibility for that gap fill at $78,000 in Bitcoin, if they choose to do this, that may not occur. So at the moment, again, it's setting another level at 93,000 and 91,000. So we'll see what happens from here. Now I've got another short word on cryptocurrencies. This is Wall Street. Going in with Tether. Tether is a stable coin on a Bitcoin lending plan. Now, this is another way to drag over the Ponzi scheme of currency. They are planning to launch multi-billion-dollar lending program using Bitcoin as collateral, but reshaping financing using Tether. Now, Tether just introduced the Hadron real-world asset tokenization platform. And we've been speaking about this. Now, this is another envelope into the CBDC for the United States, another on road, saying that they'll use Bitcoin as collateral, but you'll never see that asset. You best just to hold it on your own. We've got the Treasury warning banks using having issues with deep fake fraud. Why am I bringing this up is because Treasury, talking about financial crimes and artificial intelligence, again, powering the fraud, they're going to push biometrics even larger, tie it in with Tether. They've already said basically they're going to do this. And this is how they're going to justify and then put you on chain. So a lot of larger things here we're going to have to watch. That is the CBDC. So with this, I'd like to wish you all a wonderful trading day. Thank you kindly for being here. And until I see you again, stay free.